Coming up in this week's episode, we're going to be taking a look at the latest lender rate reductions, and there's been a lot of them this week. We'll be taking a look at the lender criteria changes from this week, alongside the latest swap rate chart that was released yesterday evening. We'll also be taking a look at the latest Halifax House Price Index report at the Bank of England Money and Credit Report. Hello everybody, and welcome to the UK Mortgage Market Insights for the week ending the 5th of January 2024. Happy New Year to you, and I hope you're all well. So we're going to start by looking at the lender rate changes that have taken place this week. There's only one lender that we're really concerned with, and that's Metro Bank. They've made improvements around their buy-to-let stress testing, meaning that there's more affordability for buy-to-let landlords. They've also made improvements to residential affordability in a few areas. Those be for joint borrower and sole proprietor mortgages, they will now accept 4 applicants' income. They've increased the maximum age of mortgages to 80, and they will now include 60% of bonuses, overtime, and commission payments in their affordability calculations. They've also decided that they're going to accept non-earned income, so things like rental profits, as long as they can be verified. And they will now consider applications from all forms of contractors. And for those people that are self-employed, they've now moved into line with some other lenders. And when calculating affordability, they will now accept director's salary plus their share of the net profit rather than the dividends. So all in all, some positive changes from Metro Bank. Moving on, let's take a quick look at the latest swap rate chart from yesterday evening. And as you can see, if we look at the current column, focusing around the 2 and the 5 year rates, we can see that the 2-year swap rate has increased slightly to 4.126, and the 5 year has increased slightly as well to 3.518. We are still seeing lender rate reductions, which we will come on to later, but these swap rates in general are now moving in the right direction, which is why we're seeing a lot of lender rate reductions, and we are hoping that that continues. But of course, all eyes are still going to be on inflation, along with other data that gets released as to how the economy is performing in general, and this will have an impact on these swap rates. So next, we're going to take a look at the Bank of England Money and Credit Report covering November 2023. Now, we were asked for our commentary on this, so I put this up on the screen. But whilst you're having a look at that, we'll just cover off the key points in the data. So net approvals for house purchases, which is an indicator of future borrowing, saw an increase from 47,900 in October to 50,100 in November. Mortgage lending to individuals was a net zero in November, compared to a 0.1 billion of net repayments in October, and annually was a 0.3% in November. This is the lowest since monthly recording began back in 1994. Net approvals for remortgages was 27,000 in November, up from 24,000 in October, and the effective rate in new mortgages was up to 5.34 in November, and the rate on outstanding mortgages was up to 3.27%. Net consumer credit borrowing rose to 2 billion in November, which was up from 1.4 billion in October. This was mainly driven by credit cards, where we saw an increase from 0.5 million in October to 1 billion in November. Now, I suspect that a lot of this was used for the Christmas spending, which is a little bit of a worrying sign that people are resorting to credit to fund Christmas. But due to the cost of living crisis, of course, people's savings have been dwindling. So this is a bit of an indication as to what's been happening there. So before I move on to the lender rate reductions that we've seen this week, I'd now just like to take a quick look at the Halifax House Price Index that was released this morning covering December. Average prices rose by 1.1% in December, which is the third increase in a row. Annually, we've seen a 1.7% increase in values over 2023. And a typical home is now valued at £287,105, which is just over a £3,000 increase month on month. Now, according to the Halifax, house prices are predicted to fall between 2 and 4% in 2024. And of course, if this is the case, then with rates dropping and improving affordability, it really does make it a strong buyer's market. And it indicates that if you have been considering purchasing, then perhaps you shouldn't really put it off any longer and you should just get straight on with it. Now, the southeast of England is still seeing the most downward pressure on prices, and that's to be expected because that's the area where we've previously seen these increases. Now, I'd just like to remind you all that this data is only covering Halifax mortgage data. It doesn't cover all other lenders and it doesn't cover cash purchases. For that information, we have to rely on the land registry data. And so when that is next released, we will, of course, let you know what the numbers are looking like. But the suspicion is the prices will have overall dropped slightly. And so on to the lender rate reductions that we've seen this week. And crikey, there's been a lot of them. And we'll just cover the main ones. But believe me, the rate war really is underway. So Halifax have made reductions of up to 0.92% this week. They've also made reductions on their 3-year fixed rate options. Leeds have improved their residential rates by up to 0.49% and their buy-to-let rates by up to 0.86% for both new and existing customers. HSBC came out at the beginning of the week some massive reductions. We've then got other lenders like LendInvest, Fleet Mortgages, and Kensington, who have made reductions of up to 0.75%. TSB were also featured this week, and they made reductions on their 2-year rates by up to 0.55% and also on their product transfer rates by up to 0.45% at the higher loan to value brackets. We were asked for our commentary on this, and as you can see on screen, there's our feature that was in the standard. There have been other lenders such as the West Brom and NatWest, along with many more, but overall, lots of lender rate reductions in the first week of the new year, and it looks like this is set to continue moving forwards, which is great news for people that do need to remortgage and for those of you that are looking to buy. So that brings us to the end of this week's episode. Hopefully you've found that useful. Just as a reminder, for those of you that are watching on TikTok, Facebook, and Instagram, the links to the relevant articles will be in the comments section. And for those of you that are watching on YouTube and listening on Spotify, the links will be in the show notes or the description. Just like to take this opportunity to remind you that our TikTok lives will be back next week on Tuesday and Thursday from 6:30, 8:30 in the evening. So please do look out for those, because if you've got any burning questions that you'd like to ask, then there's your perfect opportunity to do so. As always, thanks for watching. Thanks for your support. We really do appreciate it. If you've got any comments that you'd like to make, then please do make them, and we'll be happy to interact with you. But for now, all that leaves me to say is have a fantastic weekend, and I'll see you next Friday. Take care.